we realized that there was no one better to talk about frontier markets than frontier builders. We wrote this because living in these regions, in frontier markets, we see that there are a lot of problems to be solved. To be honest, we have good talent, but not a lot of great talent.
Are going to have to start looking into emerging markets for rational returns, and at the same time, of course, massive markets that have big problems. So I think for these funds to start getting outsized returns again, they have to look outside the US. All different types of payment use cases. So the one that we invested in now is an international remittance business, but they focus on one specific use case.
Hello, everybody. Welcome to another episode of Frontera, the podcast where we analyze what's happening in frontier markets, in frontier technologies. Today, we have a really special episode. During the last months, we've been talking a lot about fundraising and how interesting is this fundraising ecosystem in frontier markets. And today, we have Gideon Graves. He's a managing partner in investments in Lisk. And today, we wanted to invite Gideon because they just announced a new $15 million VC fund focused on frontier markets called Empower Fund. Empower Fund. I don't know what's the right way of saying it. So Gideon, how's everything, man? Welcome to the show.
Thank you so much for having me, and Simon. Appreciate having me on the show. Looking forward to it.
Amazing. And we're also with Simon, head of growth at Alliance. And today's episode is going to be really interesting because Simon and I both have been through fundraising cycles. Simon raised money for a company, obviously leading growth in Alliance. He works really closely with top entrepreneurs in different regions. And Gideon, I want to start just telling us a little bit about Lisk, Empower Fund, how it started. Tell us all about how this initiative started.
Cool. Thanks, Ab. Yeah, so Lisk's got a really interesting story, depending on how long you've been in crypto or how long some of your listeners have been in crypto. They might know who Lisk is, but Lisk launched back in 2016. They raised 14,000 Bitcoin from the community during their ICO. So this was done in the pre-sale before these private rounds were even conducted at Ethereum. So it shows you how early they were within the Web3 realm. Back then, the whole narrative and the whole focus was to become a JavaScript layer one. The idea was to try and bridge the gap between Web2 developers and this new evolution or revolution of Web3 developers. So we wanted a coding language that people could relate to and easily migrate from Web2 to Web3. Of course, things progressed, and we made some pivots along the way, and I can tell you about that. Back then, of course, the core measuring stick was your token price, right? Things have changed tremendously now, as they should. The market has become more institutionally adopted and a lot more mature. But back then, from a token standpoint, we did exceptionally well with our ICO. At one point, our all-time high from a market cap perspective was $7 billion in late 2017. During that bull run, we were top 5 at one point in terms of market cap. And then many things have happened since then. We've looked after our treasury very well. We never went the crazy Lambo route and did crazy things. Our goal as a company has always been to leverage this technology to disrupt legacy industries. And we've continued to follow that path with all the pivots and changes we've made along the way. At some point, we recognized that all the talent from a developer standpoint was in the Ethereum ecosystem. So we pivoted from a JavaScript layer 1 to a layer 2 within the Optimism superchain. So we're an EVM chain now. At the same time, we recognized that the core use cases of blockchain are predominantly being used in emerging markets. Whilst developed markets focus more on the speculative side of the crypto economy, we could clearly see that emerging market founders or frontier market founders were using this technology for the real use cases, right? They were showing the rest of the world about the true utility of this technology. And we wanted to be involved in that side of Web3. So we shifted our entire focus exclusively on emerging markets. Originally, it became a focus on Africa because we didn't want to dilute too much geography focus across the globe, and we wanted to test this thesis in a market that really needs blockchain. I mean, the huge amount of the population across the African continent is largely unbanked. So there were so many use cases that were solving such pertinent problems to that market. So we doubled down on Africa for about a year. And once we saw a lot of traction, we then expanded into Latin America and Southeast Asia. And those are the core markets that we focus on. And it brings us to today, where there's a lot of new products and exciting things that we're launching. There's a product now that's been built in stealth in the background, which is super, super exciting. PR agency said, don't say anything on the podcast, please. So I won't say what it is, but it's super exciting. At the end of Q1, there's going to be a product that we think is going to be revolutionary. So we also understand that blockchains are commoditized. At the end of the day, being an infrastructure business is super difficult with the fees that you're getting on chain, etc., and competing with the likes of Base and Solana. So we recognize that we're making a lot of pivots and strategic changes internally to become more product focused as well. And at the same time, we want to start making investments. As you can understand, a lot of layer ones and layer twos over the years have been giving out grants to try and promote activity within their ecosystem or on their chain. So we've done the same thing in the past as well. But then we started to recognize that there wasn't a lot of return in that whole endeavor of grant funding and deploying grants to different founders. So the narrative became, and that strategy internally was more to start investing and having skin in the game and going on the journey along with these startups. And the second part of it is, from an economic standpoint, we believe that there's a massive opportunity to launch a fund to invest into emerging markets, and having Web3 technology as the core catalyst for economic growth in these different markets. We think timing is perfect as well. It's the second fund that I've been involved in with this thesis. The first one was in Africa for a Swiss company, a global Swiss venture capital firm. And then they launched a fund in Africa, and they employed me to run the fund. And whilst the thesis was fantastic and we had a lot of great traction, the fund is still running now. And they have many portfolio companies. The projects that we're funding were just so early. So great utility, fantastic use case, passionate founders, but adoption was slow in terms of people actually using these apps, right? Things have changed tremendously now. So Lisk Ventures launched recently. Our first fund is the Empower Fund. We may launch others to focus on different things, but the first one is the Empower Fund within Lisk Ventures and Lisk as a company. And as you said, we're focusing on investing in startups that utilize blockchain in emerging markets at a seed stage level. Everything that we invest in is equity, though. We don't invest in speculative stuff or token rounds or SAFTs or etc. Because we believe that the technology is at a point now where we're starting to really see what it's capable of. And the focus is shifting away from speculation and more on the truer use cases. And thankfully, we have guys like Larry Fink, et cetera, that are starting to validate that everything we've theorized and everything that we've been working so hard in over the years is actually now coming into fruition. We also at a precipice of like a lot of regulations, and now institutions that we hated so much are also like getting involved. So it's an interesting time for Web3, but I think that it's going to absolutely explode in the next couple of years. There's so much adoption that's happening, and we can see it as clear as day with our portfolio companies and within our pipeline. Projects have month-on-month growth in multi-million-dollar volume in terms of the different use cases, and a lot of them in payments and fintech. But there's definitely a lot of exciting things ahead for sure.
Yeah, I think that this region, that's why we started this media arm of Bando, because we realized that there was no one better to talk about frontier markets than frontier builders, doing stuff that have the possibility and the capacity, the skills to create content. So, and Simon, I'd love to hear your take on everything that Gideon's saying. Like, what's the thing that you're looking in Alliance? For example, Rain is one of the darlings of the industry right now. It was part of Alliance. I know that a bunch of their volume comes from emerging markets. So I think that all these elements for our thesis of emerging markets being an adoption driver for crypto, it's working out. So what takes do you have around that, Simon?
So for me, just to like not repeat myself too much or repeat a lot of the things that are kind of obvious, that, like, I guess most people know, that the region is ripe for adoption, that depreciating currencies create this kind of demand for like a little bit more stable currencies, that the banking infrastructure is highly inefficient. Except for Brazil. But yeah, in most of the countries in Latin America, is highly inefficient, as inefficient as the financial infrastructure in the United States, or worse. And that stablecoins just, provide fast settlement, and just basically a better financial infrastructure, and even some chains as well. But the main thing that we look for in founders in emerging markets is a combination of deep knowledge of specific customer behaviors, or a unique insight on something that can be exploited. Maybe like a regulation, a gray area, or founders who are highly knowledgeable on regulation actually are something that we look for in that region, because a lot of the products that can be built in this space are the sort of products that are kind of boring, where it's not attracting a lot of founders to build them, compared to, for example, the AI startups, which are, I would say, a little bit more exciting. A lot of these products in the fintech world are very boring, but they come with a lot of baggage, regulatory baggage. You have to, if you scale, you actually have to deal with a lot of different players in the ecosystem. You have to know how to do enterprise sales. So the type of founder that it requires is sort of different. They're not necessarily the best technical teams, but they're really good at sales. And I've spoken about this in the past. So we do look for that, but at the same time, we go back to the basics, which is like we always are looking for teams that are highly technical, that are where the team is 50% or more very technical, that have done really impressive things in the past, right? Like they're not like in their 25 and 30s and then have been working for like a consulting company, and then out of the blue they think that they can become a unicorn founder. A lot of the times, like teams that can do these things have built companies in the past, have had exits in the past, have gone through STEM majors at the hardest universities to get into. They have had engineering roles at the hardest companies to get hired at, like Google or Stripe, right? Like they really have like those exceptional backgrounds. So you kind of have a merge of that and people who are good at, the boring stuff that I just mentioned. But one thing that is important to mention about emerging markets is a lot of these founders are going to have to deal with heavy compliance products. And even though like you can build self-custodial products in crypto, and then you can kind of like walk this kind of fine line in this gray area where you're not a bank, but you have, you can scale quicker without all this like red tape. You still have to follow, in many cases, heavy compliance operations. And so and a lot of these startups are actually based in the United States, in Delaware or in Cayman, or they have some sort of structure so that they can receive funding from United States venture capital firms. So it's not that they can just serve any sort of customer. And Latin America is full of scammers, and it's full of dirty money. And the same goes to like most of the emerging markets, right? Like compared to like the first world, there's a lot of like complexity in doing compliance. And so that's just something that we've been kind of really like we've been realizing this like over the past 6 months and a year, that like, yeah, like we definitely have to be funding these teams, but we are looking for like those founders who are ethical, and that we will never be able to control what they do ultimately, but we can sort of keep a compass, we can keep a pulse in them, and making sure that like if they're getting traction, that traction is clean And I can actually vouch for Rain. The Rain team has, even though they have so much volume, they have denied so many customers because they cannot work with them. And most of the customers are, as you mentioned, in emerging markets, but they've been really, really good with this. If you see with Rain, just to wrap it up, it's like Rain's investor updates were like, they were not growing for 2 or 3 years. One of the founders, I know him personally. He's like, he's telling his wife, like, what the hell am I doing? Like, I thought that, and then out of the blue, started like hockey sticking. But for the longest time, they were saying no to customers. They were keeping their volume and their growth in check just because they were like highly focused on working compliantly.
Yeah. I completely see what you're saying. And one of the main challenges that I see in the region, I've been building in crypto for 10 years in emerging markets, specifically in Latin America. There's a lot of people that are excited about the technology, but they are not knowledgeable product builders nor technical people. And also there's a lot of people that see opportunities to grab either cash or scams or whatever. And one bad thing about emerging markets is that people can get really ingenious to do this type of things. So the thing that you said, Simon, about at the end is social proof. If someone went through Bitso and worked there for a couple of years, I mean, that person might be something interesting to look at. Or if that person went to Stanford, Harvard, or something like that. And Gideon, I would love to get your take on. So we speak about emerging markets as like a bucket of things, but
Sure.
when we look at it, it's an absolute different reality. Nigeria or Africa and Southeast Asia, and even within Latin America, it's not the same. It's absolutely something different. Brazil, Mexico, Argentina, Colombia. In Bando, we launched in Nigeria, and we were surprised by user activity and how people, specifically in Nigeria, are willing to do a lot of things for maybe 30 cents of a dollar. And that's a good enough incentive for them to answer a survey, to get to do user interviews. So there's a lot of differences within the markets. So when you talk about emerging markets, you refer to 3 regions: Southeast Asia, Africa, and Latin America. But how are you thinking on a thesis that encapsulates all of that? What are the main things that are like the backbone for this thesis?
Yep, good question. Just to comment on what Simon said earlier, I agree with you completely that the blockchain that we're in love with and that we're working in is definitely not as sexy as AI, right? So I think originally Web3 had there was so much interest about the technology, but primarily because of people making so much money from the speculative side and essentially, gambling with these listed tokens, right? And back in the day, there were only 3,000. When Lisk was at our all-time high, there were only 3,000 tokens in 2017. Now there's almost 40 million tokens, right? So the market has changed so much. And I don't think a lot of that will go away. It will just completely shift to being more gambling. And gambling is massive, right? Betting will never go away. But we're obviously in a different place, and we're more infrastructure, and anything that has to do with financial rails is very much infrastructure, and it's a little bit more boring, and it takes a lot of time, especially for something that's new. There's a lot of compliance and regulatory conversations. It's not something that happens overnight. But like your friend that you mentioned, they stuck it out, and adoption started to happen. And the way that I sort of explain that, number one, it's all of the obvious things, right? It's like the institutions coming in. It takes them a lot of time. There's a lot of bureaucracy and red tape to understand this technology. Crypto had a very bad rep because of all the crazy things that's happened over the past couple of years. So it's understandable why it took so long. And it's not like a tangible technology that you can play with. Anyone from our grandmother to a teacher at school can interact with an LLM. Anyone can use Gemini or ChatGPT, and they can completely understand the benefits of AI, where blockchain is very much in the background. It's more of an infrastructure technology. But I think we're at that point now where if you were a founder like your friend that stuck it out, where there is now adoption, it's going to take off. And the comparison or the analogy that I would like to give there is if you think about it, like a lot of the early adopters in this tech, because it's so confusing, were the Steve Wozniaks of this world, right? So they're very tech savvy, but not necessarily the best. I'm generalizing here, of course, but not necessarily the best at commercialization, marketing a product, building a UI and UX that's not clunky and that's seamless, where blockchain and crypto rails are in the background. But now we're at a stage now where it's gotten so mature that the Steve Jobs of this world are partnering with the Wozniaks, and it's becoming easier. These products are more commercialized. They have much better marketing. The UX and UIs are what's driving convenience to use these applications. And that clunky experience that we had, that cyberpunk experience, is now very much in the background. But to answer your question on like these different emerging markets, I think the common thesis is that in any emerging market, Web3 solves economic problems, not speculative ones. So most of these geographies are mobile first, wallet first economies with weak legacy financial rails, right? So I think the main adoption is going to come from fintech and financial rails, payments, cross-border payments, remittances, etc. Then I think beyond that, it'll be certification, verification. I mean, you can imagine a country that has a lot of fraud and corruption. Most of that comes from poor tender and procurement processes that stem from the government. If you can imagine all of those processes being completely on-chain and completely transparent, it would transform emerging markets. Most people would say, well, why would any government do that? And it won't start from governments in power. It will start from governments that are putting out campaigns on why they should become in power, or why they should start governing a certain country or state. And I think we're going to start seeing a lot of governments, and Donald Trump, in fact, touched on it a little bit. Started Elon Musk with his new department at one point, where blockchain is going to start becoming part of political campaigns. But I don't think we're there yet. I think we're still at the stage now where it's going to be adopted from a financial perspective, as everyone theorized and thought. That's where the true use cases lie, and that's the low-hanging fruit. So I think that's what we're going to see now. And the common theme in emerging markets is these weak legacy financial rails that blockchain, crypto rails, stablecoins can solve. I'm extremely bullish on stablecoins. So for us, there was so number one, that was the core reason. We believe that emerging markets have this common problem. The second one is that every emerging market is slightly different in their cycle of being attractive to international investors. And for a venture fund to be successful, our startups have to raise up rounds beyond our initial ticket. So we're focusing on investing in startups from a seed stage perspective, but we are relying on the fact that these startups either list or get acquired, or there's some sort of liquidity event. And before that, the usual route to that point is going to be further financing rounds, a Series A, a Series B, a Series C, etc. And in emerging markets, there's lack of venture capital funding. The venture capital ecosystems are relatively immature. So early stage funding can and does often come from the local firms, VCs and angels, private equity firms, etc. But when you start getting to Series A and Series B, it has to come from developed markets. It has to come from the better parts of Asia, Europe, and obviously the United States. So for us, we also are looking at these different markets and assessing where they are economically from a macro perspective, knowing that Africa is probably at a base where timing is going to be everything. As Warren Buffett would say, you always want to invest when everyone is fearful. At the same time, you can also invest a little bit too early, right? And I think like for the Web3 vintage funds that were focused on equity and utility that launched a couple of years ago, in my opinion, probably a little bit too early. I think where we're at now, it's the perfect time to launch. And I think Latin America is more mature than Africa. There's historically more venture capital funding flowing into Latin America from the counterparts in the north, right? And then Southeast Asia has been very interesting to us. We were excited about the different use cases that may stem from there. But to be honest with you, so far, what we've seen is a lot of speculative stuff, a lot of gaming. Perhaps we haven't properly entrenched ourselves into the different countries there. Our main focus has been Indonesia and Vietnam, a little bit of Thailand. So for us, we also wanted to put boots on the ground. You can imagine as a fund how difficult it is to get deal flow from countries like Nigeria, Vietnam, Argentina. Culturally, they're very different. Whilst there's similarities in the problem, for us at the end of the day, what defines our product is great deal flow, meeting fantastic founders that have great businesses, that have attraction and clear product market fit. So we have boots on the ground and partnerships in all of these regions. If we find someone from Pakistan, for example, that has a great idea and they're showing traction, and for some reason they end up on our desk, it's certainly something that we would look at and potentially invest into. But we needed to double down on areas that we were bullish on, and where we could focus on spending money, time, resources, partnerships on getting access to deal flow. And these are the three regions where they have similarities, but from a macroeconomic perspective, all of them are sort of at different stages. So as a fund, we also sort of spreading our risk and not doubling down on one geography, but having a thesis that spreads into multiple, with the core focus on Web3 being like a disruptive technology, and that being most obvious in emerging markets or frontier
It's
markets.
a $15 million fund, right?
It's 15 million, but we're actually thinking of increasing it now. So there's many reasons why you would have a small fund. Number one, the ability to raise capital, of course. So we would have to convince LPs to bring in further capital. And do we have a long enough track record to be able to do that, et cetera, et cetera? That's one thing to always consider. The second one is, do you actually have enough deal flow to write all of these tickets? So let's say it was a $100 million fund. Do we have enough deal flow to write $100 million worth of investments? And we're starting to see that is definitely becoming a possibility now. And so we're thinking of increasing it, but that we'll make that decision in the coming 2-3 months.
Yeah, something that I find really motivating is when these things start to happen, and we see that, not to do like a pat in the back, but in Frontera we wrote an essay like 6 months ago. Let me share my screen because I think it's perfect for this point. We wrote this essay called, let me see how it's called, the LatAm Trillemma. Okay, so the thesis that we brought here is that in any market there is like a triangle to have a technology industry. You need to have a lot of problems, you need to have talent able to solve those problems, and then you need to have the capital to create these startups, right? When this triangle is completely full, like today, the best example of this is AI. There's a lot of capital, there's a lot of talent, and basically the problems and opportunities are almost infinite. But there are markets where there is asymmetry in these 3 dimensions. And I see that we wrote this because living in these regions, in frontier markets, we see that there are a lot of problems to be solved. And as Simon said at the beginning, to be honest, we have good talent, but not a lot of great talent. There's not enough founders. Maybe in some places, for example, in Mexico and other places of Latin America, is not embedded in the culture to be an entrepreneur. A lot of people want just to have like a base salary and live their lives in a cool way and chill way. And the largest problem that we've seen in firsthand on trying to deploy technology in frontier markets is capital. So when you see this, there's clearly an asymmetry where first capital needs to match talent, and then talent needs to match the problems to be solved. And just first party experience, when we raised the pre-seed round at Bando, I talked with all Mexican VCs, knowing that none of them wanted to invest. And some of them even couldn't invest in something like us because they raised money from the IMF or the World Bank, and they have a direct note that they cannot deploy capital in blockchain, which is idiotic, really.
Yeah,
I mean, they're losing
I agree.
Absolutely idiotic. And that's because of the, I don't know, big banks and all this scaffolding around compliance, regulation around money. So I would love to hear, Gideon, what do you think about this mental model? And also within this mental model, one of the main things, Simon, I think, nailed the talent part because of the experience building with early stage founders. You explained a lot of the capital part and how you see an opportunity. Now, I would love to deep dive in the problems part. Which are some of the biggest problems that you see that you're exciting, and your general takes about this mental model of the Trillemma of Latin America?
Yeah. One more thing on the capital point that's worth mentioning, because it's a big part of our thesis, is that like venture as an asset class. At the end of the day, venture capital is a financial product. Just like a mutual fund, just like a hedge fund, it's a financial product. It's usually 6 to 10 years. It's how long the term is of a VC fund. That's how if you invested 100K in our fund, for example, it would take minimum, I would guess, 6 years. But our fund is factually an 8 to 10 year fund. So we have to distribute all our returns in 10 years. But if we make an exit in 6 years, for example, of course, we then distribute. Point is, VC funds are super high risk. We're investing in startups where most of them fail. Statistically, 66% of seed stage checks from VCs fail, which means that if you're a seed stage fund, 2/3 of your investments go to zero. Obviously, this is a very big data set from Cambridge Associates of 66%. So it includes all funds from all over the world. But it just shows you how difficult it is to actually win from within a VC fund. At the same time, you get one startup that you invest at a $5 million valuation and they sell for $500 million. You do the math on the X's on that. It can pay huge dividends when it comes to a small fund like ours. So one massive success can pay your returns that your investors anticipate and some. So what's happened in the US more recently is that there is too much capital. So everyone has started a VC fund. Everyone's started venture funds. So what that has done is it's killed venture as an asset class. And Roelof Botha, who's a South African like me, who was the managing partner at Sequoia Capital for many years. He comes from the PayPal mafia with Elon and them. And he was heading up Sequoia Capital. He recently resigned. He also spoke about this recently on a podcast and reiterated it in some interviews after. But venture capital as an asset class is dead in the US. You've got startups that are pitching at valuations of 30, 50 million, not even Web3, right? It doesn't even have to be AI. Just it could be a biotech startup. But there's so much capital there that they can go and present to a venture fund at a $50 million valuation with almost nothing. I met in Patagonia during Edge City. I met a really cool founder from the US. Very cool idea. He basically pitched to me informally when we were out one evening. And it sounded like a very cool use case. But long story short, it was a $15 million valuation. The company had not even started yet. Then at the same time, we've just closed an investment now with a startup in Africa. They did $2 million in payment volume in December, and we invested at a $3.3 million valuation. So what I think you're going to start to see now is with venture funds being so high risk, the lack of liquidity, they anticipate the LPs and investors that invest into a fund are anticipating outsized returns. Otherwise, you might as well invest in something that's liquid, like gold or the S&P 500. And these LPs are not getting returns in the US. On average, over the last 3 years, the average IRR or yearly return is minus 2.7% in the US, which is nuts, right? So what I believe what we're going to start seeing, this is my personal thesis, but I think it's pretty sound, is that a lot of these venture funds across developed markets are going to have to start looking into emerging markets for rational returns, and at the same time, of course, massive markets that have big problems. So I think for these funds to start getting outsized returns again, they have to look outside the US. And I think a lot of these funds are going to start looking into emerging markets very soon. So I think that capital problem within the next few years is going to be solved. And a lot of US VCs that I speak to right now are looking for deal flow in emerging markets. And the greatest thing is they don't know what the use cases are. They don't know what to look for. They don't know who to trust. So I think people like us have to be that bridge to introduce VCs and to introduce investors from developed markets and be that bridge, introduce them to opportunities in emerging markets. So that was a little bit more on the capital side. Yeah.
Send them to Frontera. We have a bunch of essays. Yeah. We have a bunch of knowledge about this. We've written more than 50 essays about the economics, the dynamic, founder activities. So yeah, that's basically also our thesis.
But to answer your question around like emerging markets, like everything fintech for me is super exciting. All different types of payment use cases. So the one that we invested in now is an international remittance business, but they focused on one specific use case. They're called Paid, P-A-Y-D. I think their website is paid.money. They focus on gig workers or freelancers in Africa that are invoicing outside of Africa. Obviously, since COVID, there is so many companies that are leveraging the talent in Africa and the cheap labor, much like India had for many years. Africa probably a little bit easier. Language barrier is not as intense, and time difference isn't as intense as other parts of the world. So it's become a big theme for people to start outsourcing talent, developer skills, etc. in Africa since COVID as well, with remote working. Long story short, when these guys are invoicing their employers, the payment process obviously sucks. I mean, this is not news to us, right? Just to send money to Nigeria, for example, costs up to 19% if you're doing it in the normal banking and fiat rails. So a lot of these guys, if the employer allowed, were sending Bitcoin addresses or a wallet address from an exchange, etc. So what Paid has done is they've basically created a compliant platform for you to be able to invoice your employer, whether they use crypto or not. Crypto is in the background, and they're using crypto rails to facilitate these payments. So when people say payments and international remittance, it sounds like a cop out. It sounds like you're just saying it's one use case, but there's so many sub use cases within payments. As you know, fintechs rule the world, right? So I think there's lots of different fintech use cases that we started to see, and that's obviously one that's top of mind, a more recent one. Others that I'm super excited about is on verification, certification. Many years ago in my previous fund, we invested in a startup called House Africa in Nigeria. They verify property on chain. So it's a very basic use case. They put title deeds on chain so you can see who the true owner is. It's more complicated in terms of the different features that they have. But that's a very pertinent problem to that market. 60% of court cases in Nigeria are attributed to land disputes, right? So if you had to put property on chain in Switzerland, you're not solving a problem. So no one's rushing to do it. Will it be done eventually? Of course, it's a technology upgrade, right? Like rather write an email than send someone a letter. So eventually all of these processes will be on chain. But the problems are more significant in geographies like Latin America and so on. What I'm also excited about is governments to be on chain. I think that's going to take a very long time. Credentials to be on chain as well. But our main focus is fintech, and stablecoins is something that we're super excited about. We've just invested in a stablecoin in Indonesia. We've been looking at a ton of projects in Latin America. So our next investment is definitely going to be one from Latin America. We've been super impressed with the deal flow. Obviously, we had a lot from Africa just because of our history there in terms of Lisk starting there. So we had a bigger bucket of opportunities. But when we've made a few trips now to parts of Latin America, and we've been super impressed with the different founders that we've got to meet. That's definitely going to be we've got a couple there that I think our next portfolio company will definitely be from that region.
So to comment on the problems and the capital, basically, well, one thing I think Gideon talked a lot about, mentioned many points, so don't want to kind of be repetitive, but one thing that I do want to point out is that recently Ben Horowitz, A16Z raised 15 billion, and it's a fund that it's going to be deployed in many areas. But Ben wrote a LinkedIn post where he explained that the main two core technologies where they're focused are AI and crypto. And I was very impressed to see that he just basically put crypto next to AI, because that's a thesis that it's kind of it's been kind of clear for us. And in a way, At certain points, it has been something that we even doubted. And me personally, I even doubted, like, will crypto become relevant with everything that's happening with these kind of new AI technologies, with quantum? Like, quantum is so technical that, like, I have a hard time even arguing for and against. Like, I don't really know what's going to happen. I just hope that, like, with the quantum risk, we have all the developers in crypto kind of solving those problems, and not just in crypto, in general, in the traditional financial industry. They will also have to become like anti-quantum cryptography. They will have to build anti-quantum cryptography. But he just mentioned crypto and AI, and then he said that these technologies applied to other industries, right? To biotech and to logistics and to anything. And I thought that was really interesting because ultimately, like, crypto is just short for so much. It's one word that describes so much that is happening behind all of these new technological innovations. And I agree that it's basically something that can be applied to so many problems and to so many industries. And yeah, financial and payments are kind of like the low-hanging fruit because they're obvious and because they have the right sort of infrastructure already deployed for founders to kind of execute. But there are so many other areas where we might be a little bit early, or there might be ripe for founders to come and build as well. And one thing, for example, that I can go on forever about, like, multiple industries where I think this is interesting. But one area that I'm personally excited about, I've been thinking about it recently, like, what is something that is obvious, that is going to be obvious in like 5 to 10 years, that already exists, where there's a bunch of like zombie companies and that are like just building and like maybe having had their time under the sun. And I do think that maybe self-custody will be something that ends up being important. Because everybody believes that custodial products basically won. Like, custodial products are there because, like, the user experience is so much better, and because banks and governments are going to regulate it and are going to try to make everything easy to be custodial, and they're going to try to block self-custodial products, and that the experience with self-custody is hard, and multi-signature and multi-party computation is hard. But I don't know what's going to happen, but I think there's going to be a black swan event, just like Trump becoming a president was a black swan event for stablecoins, or like COVID was a black swan event for global payment companies. I think there will be a black swan event for self-custody. I hope so. And so, yeah, that's just something that I'm excited about. And it's an area that falls into the problem category. In terms of capital, I think Gideon mentioned a lot of things, but one thing I would say is it doesn't matter if you're building in emerging markets or for emerging markets. Founders that are serious about building big companies should, like, sooner than later, have a company in San Francisco or New York. Have an office in San Francisco or New York, and should spend time in these cities, which is the United States has clearly become the capital of the world in terms of crypto and AI. It's where most of the VCs are. It becomes so much easier for founders to raise Series A's and Series B's just because they have an office in New York. So if you want to play the statistics game, that's something that I would like highly recommend for founders as well.
A lot to unpack here. One of the things that I've been thinking for a long time is that I always ask this question: what would you rather have? Imagine that you're a knight in the Middle Ages, the best shield or the best sword? Or if you're a car, like, what would you rather have? Like, the best engine or the best brakes? And that's how I see crypto and AI. One, it's an attack technology, like a reproduction technology and expansion technology. That's AI. And crypto is more like a defensive technology, a technology of self-sovereignty, of privacy, of cryptography. So if you do not have the convergence of those, it's obvious, for example, that in a couple of maybe years, all calls will have like a cryptographic proof that you're talking with a human. Even Tinder is starting to do that with World, because I think that there should be like horror stories of that thing being abused, right? So I completely understand what you say, Simon. And also on self custody, I can go a lot of time talking about it, because one of the things that I think a lot of people do not understand about self custody is just the enhancement of the backend that brings for financial institutions. When we were at Bitso, that's a custodial product. Maintaining custody, it's really hard. And when you have non-custodial assets, basically you're delegating all of the financial infrastructure, the trading engine, the settlement engine, the reconciliation part to the blockchain. And that's such a level up for the financial technologies that it's fascinating and amazing. So I completely agree. And guys, I think that we could go on for hours. If we were in like physically at the same spot with maybe a beer, we'll be talking for 12 hours or so. But we need to stop. And Gideon, I would love to hear where can founders reach out, because a lot of people will be interested in your thesis.
Yeah, sure. I mean, you can. So, to me personally, they can just send me a DM on X. It's my name and surname, so at Gideon Greaves. And then if you go onto our website, list.com, and you click fund, on that page, on our fund page, you can apply for funding. Obviously, we get a lot of applications there. But that is one way to do it. Otherwise, send me a DM. No one has sent me a DM to offer funding yet on Twitter, but I get so many on LinkedIn, it's impossible to keep them. So the holy grail would be Twitter, because I'll definitely read that one. LinkedIn, I miss it all the time, but we do look at the fund applications on our website as well.
Amazing, perfect. Well, you can follow Simon in X, Real Simon at Real Simon. You can follow me at Abraham CR. Remember to subscribe to our newsletter. I do not joke when I say that we are doing the best research about frontier markets. Go there, read it. It's amazing. And thank you guys for a great episode, and see you around. Take care. Thank you.
Thanks, gentlemen. Thank you very much.